BlackRock quietly accumulates over 3% of Bitcoin supply. Take a moment. BlackRock, the world's largest asset manager, has quietly amassed a massive stake in Bitcoin. Through its iShares Bitcoin Trust, or IBIT, the firm now holds 662,500 BTC, worth over $72 billion. That's more than 3% of all circulating Bitcoin. Notice this number, IBIT is now the second largest Bitcoin holder, only behind Satoshi Nakamoto. What's striking is how fast this happened. IBIT reached this milestone in just 341 days, compared to nearly 1,600 days for the SPDR Gold Shares ETF to reach a similar scale. This shows that institutional adoption of Bitcoin is moving faster than gold's adoption. Let's pause for a second. What does this mean for the market? First, it legitimizes Bitcoin as a mainstream asset. No longer just a fringe, high-risk investment, Bitcoin is now a long-term institutional asset. Second, it boosts confidence among institutions. Pension funds, hedge funds, and traditional managers now have a regulated, familiar way to access Bitcoin, no more worries about wallets, private keys, or exchange risk. Third, there's a potential supply shock. With over 3% of Bitcoin held by one institution, liquidity shrinks, which could put upward pressure on price over the long term, especially with upcoming halvings. And compare this to gold. Bitcoin ETFs are scaling faster than gold ETFs, reinforcing the view of Bitcoin as digital gold, but evolving at a much faster pace, with stronger generational adoption. Finally, the strategic takeaway. BlackRock sees Bitcoin as a scarce, inflation-hedging digital asset. Their accumulation suggests that in the next 5 to 10 years, Bitcoin could become a financial standard, much like gold once did. Take note, this could mark a historic turning point, shifting the question from, should I invest, to, how much should I hold? Take note, the U.S. Securities and Exchange Commission, SEC, has extended the review period for the Truth Social Bitcoin and Ethereum ETF to October 8, 2025, instead of the originally planned August 24. This decision comes amid rising concerns about conflicts of interest involving former President Donald Trump and his cryptocurrency holdings. The ETF, proposed by Trump Media and Technology Group, TMTG, plans to allocate 75% to Bitcoin and 25% to Ethereum. It would be among the first crypto ETFs to give investors direct ownership of these coins without having to buy or store them themselves. However, the extension has sparked worries over potential conflicts, as Trump owns roughly 52% of TMTG and is linked to other crypto projects, including World Liberty Financial and the meme coin Dollar Trump. Regulators and some lawmakers have criticized the move, noting possible conflicts between crypto policy and personal financial interests. The SEC emphasizes that a thorough and transparent review is essential to maintain public trust in financial markets. The upcoming decision will not only affect new investment opportunities for institutional and retail investors, but also reflects how regulators approach crypto ETFs tied to public figures. Take a moment. Peter Todd, a veteran Bitcoin developer, sparked controversy on X on August 17, 2025, by promoting the Joker-themed meme coin, Haha. He revealed he was paid $5,000 in Solana, which he then converted to Bitcoin. Todd voluntarily disclosed this, even though he was not required to tag it as an ad. Pay close attention, after his post, Haha surged 1,500% to $0.00008 United States dollars, then dropped 95% in a classic rug pull. Surprisingly, within 24 hours, it recovered nearly 3,900% to $0.0002 United States dollars, reaching a market cap of $225,000. This move sparked mixed reactions. Some criticized Todd's ethics, while others praised his transparency. Todd, known for his independent views and active role in Bitcoin debates, seems unfazed by the controversy. Take a moment. Previously, Todd was speculated to be Satoshi Nakamoto in an HBO documentary, but he denied the claims. Google has become the largest shareholder of Bitcoin miner TeraWulf, acquiring a 14% equity stake through a strategic partnership. This follows Google's increased support of TeraWulf's 10-year colocation lease with AI infrastructure provider FluidStack. In exchange for backing up to $3.2 billion in lease obligations, Google received warrants for over 73 million shares, securing its top shareholder position. Pay close attention. The collaboration focuses on TeraWulf's Lake Mariner data center in New York, where FluidStack plans to deploy over 200 megawatts of high-performance computing. The expansion, starting in the second half of 2026, guarantees $3.7 billion in revenue, with potential upside to $8.7 billion. TeraWulf continues Bitcoin mining, but is shifting strategically towards AI and high-performance computing, leveraging zero-carbon infrastructure to grow in both blockchain and AI sectors. Notice this. TeraWulf stock, Wolf, surged following the announcement, reflecting strong investor optimism around the company's evolving business model and strategic partnerships. On August 18, 2025, Michael Saylor, founder and former CEO of Strategy Inc., announced the company purchased an additional 430 BTC, totaling approximately $51.4 million, at an average price of $119,666 per Bitcoin. With this purchase, Strategy now holds nearly 630,000 BTC, worth over $72 billion at current market prices. As of August 17, the company had spent about $46.15 billion to acquire 629,376 BTC, at an average cost of $73,320 per Bitcoin, yielding an unrealized gain of over $26 billion. Despite a 13% drop in MSTR stock over the past month, currently trading below $370, Strategy's long-term Bitcoin accumulation strategy remains strong. This move is part of Strategy Inc.'s broader plan to build the world's largest Bitcoin reserve, regardless of short-term market volatility. MicroStrategy, the world's largest corporate holder of Bitcoin, is facing strong backlash after Chairman Michael Saylor announced a controversial policy change on stock issuance. The company removed a long-standing safeguard that prevented issuing shares below 2.5 times net asset value. Saylor says the move adds flexibility, but many investors believe it opens the door to dilution and erodes shareholder trust. Analyst Jacob King went further, accusing Saylor of breaking promises, noting MicroStrategy's premium over NAV has already dropped from 3.4 times to just 1.6 since late 2024. Critics warn this change not only threatens shareholder value, but also ties MicroStrategy's financial health even tighter to Bitcoin's volatility, amplifying both risk and uncertainty. VanEck, the investment firm, has reaffirmed its forecast that Bitcoin could reach $180,000 by the end of 2025, even amid short-term market volatility. This update comes from their mid-August 2025 chain check report, highlighting strong institutional inflows and favorable macro fundamentals. Pay close attention to this. 92% of on-chain Bitcoin is currently profitable, signaling active participation from major institutions. Companies like MicroStrategy continue to maintain significant holdings, strengthening confidence in BTC. Next, Bitcoin ETFs in the US have attracted over $54.97 billion in inflows, pushing total assets under management to $151.9 billion, reflecting growing institutional adoption. However, VanEck also warns prolonged periods of low Bitcoin volatility could impact the ability of businesses holding BTC to raise capital, potentially slowing the upward momentum. As of now, Bitcoin trades around $115,518, with daily highs at $116,997 and lows at $114,608. Take a moment, keep monitoring these developments closely, because institutional behavior and macro trends could define BTC's path to $180,000. Last week, digital asset funds recorded $3.75 billion in inflows, the fourth largest week ever. And here's the surprise: Ethereum, not Bitcoin, led the charge. Ethereum alone pulled in $2.87 billion, about 77% of the total. Year to date, that's $11 billion invested in ETH. By comparison, Bitcoin saw just $550 million, barely one-fifth of Ethereum's share. Other assets gained too. Solana, XRP, Sway, and Chainlink all attracted fresh capital. Meanwhile, Litecoin and TON faced outflows. Most of the money, nearly 99%, came from the United States, with smaller contributions from Canada, Hong Kong, Australia, and Switzerland. Sweden and Brazil actually saw withdrawals, but markets pulled back right after. On August 18, Bitcoin slid from 118,000 to 115,000, Ethereum from 4,500 to 4,300, with over 400 million in long positions liquidated. Funding rates even flipped negative. Still, corporate buyers are stepping in. Tokyo-listed Metaplanet added 775 Bitcoin over the weekend, signaling institutions remain confident despite short-term volatility. Amdex, a leading crypto services firm in the Netherlands, has announced plans to launch AMBTS, Amsterdam Bitcoin Treasury Strategy, aiming to list on Euronext Amsterdam. This new company will operate independently, focusing solely on holding Bitcoin, with a long-term target of owning at least 1% of the total Bitcoin supply. Pay close attention, the goal is to accumulate around 210,000 BTC, roughly 1% of current Bitcoin supply, representing an estimated $24 billion investment at today's prices. Next, funding will come from private investors during initial capital rounds, while AMBTS maintains independent governance, entirely dedicated to its Bitcoin treasury strategy. Take a moment, this move reflects a broader trend of institutions and governments increasingly holding Bitcoin as a reserve asset. Currently, over 10% of Bitcoin supply is held by organizations, governments, and corporations. Finally, the Euronext listing offers both institutional and retail investors a transparent, structured way to participate in Bitcoin. This is a major step in legitimizing and institutionalizing cryptocurrency in Europe. Well, that's everything Crypto10 Digest wanted to share with you today. Mike really hopes you got some value out of this video. And hey, if you'd like to support the channel or explore some cool perks, just check out the links right below this video. You'll find things like fee discounts, bonuses, maybe even a few tools.